Hello. Welcome to this Saturday live stream. Only enter your trades on these 3 breakout strategies. Literally. I mean, if you know of any other strategies at the end of this live stream, enter that strategy in the chat box. I'd love to know how you enter into your trades. You must have a system for entering into your trades. Let us know what they are. So I'm going to go over 3 of the, they are breakout strategies and they are candlestick patterns that I look out for before I enter a trade. Now, it doesn't even matter if it's a long-term trade where I'm not necessarily attempting to scalp or day trade or swing trade. I still like to enter into a trade on one of these 3 breakout strategies. So the very first one, so it's the breakout candlestick pattern, and for each time I'm going to go to the same screen, and I'm using Bitcoin. This is this morning's Bitcoin chart, guys. Bitcoin is doing stuff, and for whatever reason I drew this on the 1 minute, but that's okay. As a day trader or as a scalper, your 1 minute is so important. Your 1 minute chart is so important, because don't ever think of entering into a trade on the higher time frames. Don't enter in on a daily. Don't enter on a 4 hourly. Don't enter a trade on a hourly. Why would you do that? You want to enter. You want to zoom in on your trades, and you want to enter into your trades on your 1 minute and your 5 minutes. So here I have my 1 minute chart. Hi Zama from South Africa. Tony, it's good to have you back again. Yeah, so the very first breakout strategy I think I was talking about. Okay, so the breakout strategy I think is pretty basic, guys. If you're not using it from today onwards, make sure you start using it. So what is it? And you have seen the blue rectangles. That just shows your typical breakout. Now this is a chart from earlier this morning. So assuming I wanted to enter into a Bitcoin trade, be it a futures trade, or be it that I just want to accumulate more Bitcoin. If I wanted to buy more Bitcoin just to hold, I could use a 1 minute. I may just, sometimes I just jump in, just depends on how busy I am. If I'm long in Bitcoin, because Bitcoin and all the cryptocurrency market have been trading at their lows, you know, to me there's not much difference between 30k and 31,000, but it is good practice to enter in on a breakout. So I'm going to zoom in on my breakout here. And so you want to enter into Bitcoin, and we see that dip, nice dip, and we see the candlestick. This candlestick, by the way, is called a lower low green. Anytime you see a lower low green candlestick after downward price action, that's always a good time to enter into your trade. And you can see after this lower low green with the tail, price action moves up. Assuming price action moves up, you've missed it, and it starts, what's it doing here on this rectangle? It is consolidating. It's not going anywhere. It's just zigzagging, a little bit up, a little bit down. It's not really trending. Then the time at which you want to enter the trade with a breakout strategy is when it breaks above the line. So you would have drawn a line, a price line right there. It doesn't have to be a rectangle, just a price line. Because as soon as there is a move, and say I've missed that move and I was waiting to maybe increase my positions on a long position, I would create this price line, this white price line, and I would wait for that candlestick to break above it. Now, a point to take note of, which I tend to try to mention quite a bit, is always wait for your candlestick that breaks out to close. So each of these candlesticks are 1 minute candlesticks. So wait the 1 minute. Wait for the whole 1 minute and make sure it closes as this one has. Why do I say that? Obviously, you guys know this green candlestick in the first 30 seconds of the 1 minute can start off green, and the second half of the 1 minute, the other 30 seconds, it can end up red. Like just go straight back into the rectangle and keep on. It can just, this baby here can keep on for days. It can keep on going sideways. So always wait for that close. So on the close of this second candlestick, then I would enter the trade. That's just to be sure. Now, it doesn't mean price action still can't retrace. It can't come back, but at least you're increasing your chances by waiting for a second candlestick to close. Okay, your second strategy is a crossover. I hope most of you have heard of the golden cross and the death cross, because I have made a couple of videos on it and the importance of the crosses or the crossover. So again, we're talking moving averages. To enter, guys, we're talking about entering into a trade. To be certain that a trade is definitely trending in the direction you want it to trend, then make sure you have the crossovers on the higher time frame, on the monthly, on the weekly, on the daily. I'm going to move over to the charts, and I have the green and I have the red, the green and the red. So with the green, we see my blue moving average is the 10-day moving average, and the yellow is the 20-day moving average. So these two averages, when any lower time average or any smaller time average crosses above any larger time average, so if your 20-day moving average crosses above your 50-day moving average, then we're calling that a crossover. And basically, I call them all golden crosses. I think it's only when the 50 crosses over the 100 or something that is technically a golden cross. But you know what? Once I get a crossover like we have at the green spot, you can see what happens with price action. The big green candlestick is the one that evokes this crossover. And as soon as there's that crossover, it moves straight into a consolidation. You wish it doesn't do these things, but you know what? It's price. What creates price action is how many buyers there are as compared to sellers. That's it. That's price action. But after this consolidation of, it looks like 8 minutes or so, what do we have? We still have that nice upward price action. And up here again, we have another bunch of consolidations. So you wait for the crossovers and then you enter your trade. Here's another crossover here, which I didn't highlight, because after this downside crossover where the blue, the smaller moving average crosses down below, see what happens again? Price action goes down. But look at this big one here. Crossover over here, and what happens? Price action plummets, literally. And so crossovers, make it part of your trading portfolio that you're looking out for your crossovers before you enter into your trade. Okay, and then so let's go back. So then the third breakout strategy is the pullback. The pullback is always occurring. It's right. You have price action pulls up and then price action kind of retraces. So that is a fact of life with the charts. With candlestick patterns, we always have the pullbacks. Question is, are we utilizing these pullbacks? Are we letting them speak to us when we trade? The pullbacks are critical, and I think I have yellow, just one pullback. Yes, I think I have just one pullback on my chart. Okay. And that's enough, because we have pullbacks all over the place. It's a retracement. It's almost like 4 steps forward, 1 step backward. And it's okay if it's just 4-1, or if it's 10 steps forward and 2 steps backwards. Then we call it a retracement. If it's 10 steps forward and 10 steps backward, we're going to call that a reversal. That is not fun. We don't want reversals. Okay, so we have that pullback. I'm going to zoom in a little bit. And this pullback is important because what you want to look for, assuming you wanted to enter in on the upward swing, again, you missed it, or you want to increase your position size. Guys, always wait for the pullback. Now, one thing a lot of newbies do, and I had to train myself not to do it because it's hard not to do it, is to not enter on an upswing when price is like, when you have this green, it's hard not to jump in because FOMO sets in. You think, oh my goodness, this thing is going to the moon and it's going without me. I better jump in there and pick up, some coins, get a piece of this action. But you risk the pullback. So you pick up a coin right at this point. I'm gonna move this price. Let's say you pick up your coin right at this point on the uptick, and then you get hit by this retracement. See this retracement. Now this retracement, what if it ended up being a complete reversal where price action just kept on going down, like zipping all the way down? Well, you entered in on the upswing. So you want to train yourself not to enter in on an upswing and to calm down. Wait for the retracement. It will retrace. And when it comes back down, that's called the pullback. And once it pulls back, the minute it starts taking off again, that's when you begin to look out to get back into the trade. So you have the pullback and then you have the breakout. It's going to pull back as it did down to this line here. And we have 1, 2, 3. We have 3 candlesticks refusing to break below. So that's a nice line of support. This is how you find your lines of support. You find your lines of support when price action hits a level and it doesn't fall below. It's a strong support level. There are trading bots buying up positions at the purple level, refusing to allow price action to break below it. So that's how you know this is a line of support, and you want to buy on the line of support. You don't want to buy on the line of resistance, so, and then the breakout. So those are the 3 strategies that I use, and I hope to see you guys same time, same place next week. Take care and enjoy the rest of your weekend.